This is Bloomberg Technology. I'm Taylor Riggs in for Emily Chang. Coming up in the next hour, big tech rallies on hopes of stimulus, shrugging off threats of antitrust. We speak with Ken Buck of Colorado on the antitrust report from legislators and if the findings are a real threat to the companies. Plus, demand for gaming. We speak to Ann Hand, the CEO of Super League Gaming, on one of the fastest growing segments in this pandemic. But can demand for gaming continue if we start to open up the economy? And money is stolen. Robinhood users say their accounts were looted and they had no one to call. What is your path of recourse if you wake up and your Robinhood account has been drained? Well, the good news is Abigail Doolittle's here with us. Her account has not been drained. She's been here with us all day. And really the hope of stimulus really pushing big tech into further and further outperformance.
It certainly is. We had another risk-on day here within the context of not just one risk-on week, but a second risk-on week in a row. And really for the NASDAQ 100, a third risk-on week. So we had that really brutal September that felt so bearish. It was bearish, but we seem to really be recovering from that. And today and this week, later this week, after so many whipsaws around stimulus on, stimulus off. Right now, there is the hope on the part of traders and investors that stimulus is on and some sort of big deal could be agreed on. Now, relative to the S&P 500 on the week, up nearly 4%. Its best week since early July. The NASDAQ 100 having, as I mentioned, its third up week in a row. The first time we've seen that since August, and its best week since July. A big driver for both of these indexes. Amazon up 5.2% and getting a new price target today on the street of $4,000, suggesting that there could be quite a bit of upside there. And of course, Prime Day days next week. So that could be something that investors are looking forward to. And confirming the risk-on tone this week, Taylor, bonds were down, although the 10-year yield still not popping above that range, right around 80 basis points. Now, as for one of the big stories on the day that helped one of the specific indexes that is near and dear to your heart in terms of technology, that's the SOX, another record high. And that had a lot to do with a potential deal talk that AMD is in talks to buy Xilinx, a competitor, for about $30 billion. Xilinx popping sharply higher, the best day since January of 2019, up 14%. The thought here is this will help AMD take on its other rival, Intel. Now, Taylor, the interesting thing about the SOX, yes, it has a record high. If we go into the Bloomberg terminal, though, there is reason to think this index is a bit overheated on a weekly basis, which gives it more heft. Because in the Bloomberg terminal, we have the SOX over the last number of years trading in a pretty reliable trend channel between the buyers and the sellers. And you can see each time that it's gotten toward the top of that channel, it eventually goes back down. Now, it's hard to say. Back in 2017, 2018, it rode in a sideways range for a while. That may be the case here, up and down a little bit. But the indicators on the bottom, the SOX is the most overbought on a MACD perspective that it's ever been. And the RSI does not look great either, suggesting that maybe investors just a little bit ahead of themselves on these chips. Let's see as we go into the end of the year. But right now, the bulls certainly out on the day and on the week, not just for chips, but the broader risk markets, Taylor.
Always on top of it. Thank you, as always, Abigail Doolittle. And looking more at market winners today, big tech rallying on signs that President Trump says maybe a stimulus package is on the horizon. But the threats of antitrust have not gone away. Joining us now on the phone, Michael Levine, Pivotal Research Senior Analyst. Michael, I am curious, just from a broad perspective, as you think about antitrust, is this fears of a tomorrow issue, or are these stocks rallying because this could be a decade-long fight and they may come out unscathed?
You know, I think there's an element that has acted as an overhang, Taylor, across multiples, across the big tech names. You know, besides Google, Facebook, Amazon, which we overtly cover, but I would put Apple increasingly in that camp as well. You know, I think, look, if the government brings a case, I do expect it's going to basically be tied up in the courts for a couple of years at a bare minimum. And, you know, but when I think through the call it at least Facebook, Amazon, and Google, you know, I actually look at the regulatory potential impact ranges, so kind of different company to company.
Can we talk first about Facebook? A lot of people
Sure.
have cited there's Facebook, there's Messenger, there's WhatsApp, there's Instagram. Is there a real threat that all those get taken apart?
If, in the event that it did, I actually would say Facebook, of the three, I look at probably having the most disruptions if that were to occur. But for what it's worth, I mean, obviously the government was a little bit distracted with everything that was going on with COVID, but, they were going to go ahead, seek an injunction against the FTC was about them tying together the Messenger platform and Instagram. And the fact that actually proceeded without the injunction, to me, probably on the margin, a slight positive update. The part I think investors very often like to say, than some of the parts that the companies will be worth more to the extent that there's divestitures. I mean, I don't know if I entirely subscribe to that with Facebook, because let's say the worst case, that Big Blue and Instagram basically get broken up. You're going to have to rebuild the targeting a second time over. You're going to have to rebuild the sales team. You're not going to have some of the revenue synergies that have existed before. So to me, of the three, that's actually the company that I'm probably the most nervous about. Google, I look at three potential scenarios, and I'd sort of tie in Apple around one. I think Apple has been getting some increasing scrutiny around the 30% App Store tax. I know you're going to talk gaming a little bit later on in the hour, and I mean, I'd ask them. It's like you walk out the door as a gaming company, and 30 cents of every dollar gets paid over to Apple or Google. So, and the government went after Google for a year and a half back in 2010, walked away with no win. And I think if they're looking at this again, they're like, fine, we could say search is a monopoly, but what do you do about that? How do you break it up? But the government could say to Apple and Google, you know what, 30% is just not reasonable. You guys are a duopoly. The fair rate is now 15%.
Right.
Like, it's something that's quantifiable. It's something that's implementable. Like, that to me is something that's in the range of possibilities. And the second, I mean, I remember seeing the COVID crisis, even a story hitting on Bloomberg about Google talking about spinning out DoubleClick. Like, to me, that would be, if this makes the government go away, would be the best chess move of all time. Since Google has already gone ahead and with the Chrome browser ad blocking and cookie elimination, they're sort of in the process of devaluing the DoubleClick asset and the Google ad networks. And it's really just not a big chunk of what drives their profitability or growth.
There's a lot to digest there, and I always wish we had more time. In the few minutes that we have left, I want to switch to Amazon. A lot has been said about Amazon Web Services, but there is some certain competition within that space as well. What do you see as the biggest risk to Amazon, of course, even as you upgrade, as we know, to near a street high of $4,500 a share in just the last week?
Yeah, for Amazon, I really think the only thing they would pick on would basically be around private label. I mean, I don't have an exact number on it, but I would guess it's 3% of revenues. It's probably higher margin business, so maybe 5 to 6% of EBIT. And we took our price target up. I think people are not appreciating some of the dynamics about the amount of EBIT dollars that they generate out of the advertising business. So I'm like, okay, take 6% away from EBIT. Like, numbers are still materially too low. So, I think this is a $6,000 stock, Taylor, in 2013 as it's getting valued on 2014 numbers. I mean, there's not a lot of names in big tech that I could say could give you that kind of a CAGR over a few-year period.
Well, maybe if you're still allowed on the show in 2013, and if it's a $6,000 a share, we'll let you back quickly, of course, though, before I let you go. Prime Day coming up next week. Does this help them? I mean, it's in the fourth quarter, so Prime Day is now all so compressed within the key holiday shopping season. What do you expect? I think that they're going to end up getting an incremental driver from it. I mean, one thing I was wondering about is, would they conceivably start to give away the Fire TV hardware? The fact that they just decided to take the Roku channel yesterday makes me think maybe that's a little less likely, since I think that would be partly where they'd be going after. Look, I think it's just going to be a great tailwind for the fourth quarter. It's always been a big event for them. Helps drive a lot of their own branded hardware. And I'd say just for the category in general of advertising, really positive, since I actually think you're going to see Target and Walmart, in terms of just
just competitively trying to go at Amazon. So my suspicion is it's going to be a very nice tailwind for just the online ad space in the fourth quarter.
Michael Levine of Pivotal Research, thank you as always for joining us. And stick with us. We're going to stay on this topic. Coming up, a House panel led by Democrats seeking the breakup of tech giants such as Amazon and Apple. We'll talk to one Republican congressman on his thoughts about the report. All of that next. This is Bloomberg. This week, House leaders released a stunning report that could pave the way to break up so-called monopolies like Apple, Amazon, Facebook, and the companies are pushing back. Republican Representative Ken Buck of Colorado joins us now to discuss that report and big tech's response. Ken, pretty simple. What's your take?
Well, my take is that some of these companies have been cheating, others have been stifling innovation, and the time has come that the government gets the resources, the FTC and the Antitrust Division, to do their job. There have been over 750 mergers and acquisitions in this area in the last 10 years. Very few have received any scrutiny, and we need to do, the federal government needs to do a better job of scrutinizing these mergers and acquisitions, of making sure these companies stop cheating, and of really putting some teeth into the antitrust laws.
Representative, it's interesting, though, that in the last year or so, as there has been more pressure and more discussions about antitrust, they still have continued a lot of these mergers and acquisitions. Are you concerned that that pace hasn't slowed?
I am concerned with that, and I think they understand that the enforcement agencies are busy, they're undermanned. And the one piece of bipartisan great news that we have is that both Republicans and Democrats in the House, and I would guess in the Senate also, feel very strongly that we should increase the resources at the two enforcement agencies. They are now less staffed, they are lower staffed than they were 10 years ago. And given what's happening in high tech, we just can't allow that to happen.
Congressman, talk to me about the individual companies. We were having a discussion in the last segment, and an analyst who's been covering these companies on the street said that Facebook potentially could be the most disruptive if broken up. Are you worried about that disruption? Which company could present the biggest risk, perhaps, of if there is a breakup, how that ends up happening?
I'm not concerned at all. I don't know that the enforcers are going to make the decision to seek breakup as the remedy, but I certainly believe that Facebook has acquired companies that are for the purpose of stifling future competition. And I think it's really important that we get back to, and perhaps we need to change the burden of proof. That a company that dominates a marketplace like the 4 or 5 companies we're talking about, the burden shifts. And when they engage in a merger or acquisition, they have to prove that it's not anti-competitive, as opposed to the government having to prove that it is anti-competitive. I don't want to lower that bar so much so that we have a disruption in the economy. But I do think for companies in this 80-90% bracket of domination in the marketplace, that they should have more of a burden than the companies that are at 25-30%.
So let's talk a little bit about some of these individual companies. I mentioned Facebook, Alphabet, Google, of course, a big search engine, and that is coming under scrutiny. What, though, does a breakup look like? How do you break up search engines? How have they suppressed competition?
Well, what they've done in competition is what they have used their search engine to accumulate information about buying habits of millions and millions of people. And then they have created products to compete with the products that are on their search engine. So Amazon and Google both do this, whether it's in a music app or and Apple also, whether all these different companies that there are separate lines, product lines that they're creating, they are creating to compete with other companies, and they have this tremendous advantage because they own the platform that people buy the product on.
Let's talk about Apple a little bit. Globally, Android actually has a bigger market share than their iOS software. So is that really a concern, or is it more concern about the fees from the App Store?
Well, I think it's the overall business plan that Apple has put together that is the major concern. It's not just the sale of iPhones or Apple products overall, but it is the App Store, the other areas that Apple engages in. They use that iPhone product to then hamper competition from these startups. And what's so ironic to me is these five companies were started in a dorm room, in a garage. They absolutely took advantage of our capitalist system. They were the startups. They got the venture capital. They moved forward, and now they are suppressing the very businesses that are so similar to what they were a decade or two ago.
I'm glad that you brought up startups because there has been some concern. I'm thinking about Microsoft in the 90s. They were so focused on this legislation and antitrust and trying to fend off concerns about the fact that they were a monopoly, that there was this sort of lost period for them where they were distracted. And so they were no longer innovating. And then that's really when you had a lot of these new companies that we see today that came in as the disruptors. Are you worried that maybe then these companies are so focused on this antitrust that then we're building up newer companies that eventually will just take over because these companies will no longer be able to innovate? Is that a risk?
Oh, I think I'm not worried about it. I think it's great that there will be garages across America starting new companies, and the venture capitalists will be able to go to all these startups and evaluate their products and their management team and decide whether to invest money or not. I think that's what makes America so much different than every other country in the world, is that we innovate, and innovation is really the hallmark of our capitalism, of our economy. China will steal whatever we innovate 5 or 10 years later. But let's make sure that we are doing everything we can to innovate. And these companies, the 4 or 5 companies we're talking about, are crushing the small innovators. And that's what the problem is. And that's what I hope the next phase of our antitrust work in Congress is to make sure that we're focused on how do we create a remedy so that these small companies are able to grow.
Congressman Ken Buck of Colorado, thank you as always for your perspective and for your time. Coming up, a startup working to transform what the family planning aisle looks like, all through a partnership with Walmart. We'll hear from the CEO of Modern Fertility. All of that next. This is Bloomberg. No more expensive trips to a doctor's office. Direct-to-consumer startup Modern Fertility partnering with Walmart to make reproductive health products for women more affordable and accessible during the COVID-19 pandemic. Joining us now to discuss their new product expansion, Afton Vetchery, co-founder and CEO of Modern Fertility. She is the latest guest in our Retail Transformed series. And it's great to have you. And I think what's fascinating is there's been this big shift away from big box into direct to consumer. Why now the shift for you back into companies like a Walmart?
Yeah, well, thanks so much for having me. And I think that this transition is really everywhere. I think for Modern Fertility, it's a bit more straightforward. I think for the new fertility essentials that we launched 3 months ago that went live into 1,500 Walmart stores about 2 weeks ago, pregnancy testing was one of those products. And today, about 85% of pregnancy tests are bought on retail aisles. And so for us and just building a direct-to-consumer company, it's really meeting women where they are. And so retail is just an essential part of that strategy. So I think for every company, it's a bit different. But for us, this just was an essential part of the next phase of our strategy.
And browsing through the website, I was seeing a lot, of course, on your staple product, the hormone fertility product. And then, of course, as you just mentioned, out in some stores, pregnancy and an ovulation test. I'm curious why the expansion at this moment?
Yeah, so, we started the company as a fertility information company. We felt like the conversation around fertility was very reactive as opposed to proactive. So with our flagship product, the Modern Fertility Hormone Test, we basically took the exact same laboratory tests that women would typically do in an infertility clinic if they were having trouble getting pregnant, and we took those out of the clinic and made them accessible to women earlier in life at a fraction of the cost in a really easy-to-access format, a finger prick. But by launching it in this kind of physician-mediated direct-to-consumer environment initially, we build relationships with our customers, with our community, with our following. And so as part of that, we just started getting a lot of requests and a lot of questions about why don't ovulation tests work for me? What pregnancy test should I buy? And when we really dug into the science, we saw an opportunity to really develop and build a better product for women, to expand our set to include just a broader offering of fertility essentials, and then go a step further by teaming up with Walmart and being able to meet women where they were on aisles across the country. And I think, all too often direct-to-consumer companies are, focused on the coast. They're focused on kind of this luxury or premium product. And honestly, fertility and fertility information is often seen in that same construct. And so in starting Modern Fertility, it was really breaking down these barriers and bringing fertility information to the masses, believing that fertility is a right, not a luxury. And teaming up with Walmart was a kind of another step in that journey.
Switching over into more of the funding aspect of the business, I am curious what the funding environment has been like for you. If Silicon Valley, too, shares the views that you do on meeting women where they're at.
Yeah, so, I think Silicon Valley is playing a little bit of catch up right now on investing in women's health. And we're seeing just now a lot of trends in just broader kind of fintech investing. This was not the case when we started raising for Modern Fertility in early 2017. When I would go in and pitch investors on a fertility wellness company or a company that was focused on fertility before a woman was actively trying to conceive, I was met with a lot of confused faces. And so, fast forward from that point, now about 3/4 of our customers are 1 to 3 years away from actively trying to conceive. And I think that this broader trend of, women waiting until later in life to start their families, having on kind of another zone, we have so much information about our clean beauty products.
So hard. Sorry, I have to cut you off. I hate
box.
to do that. Afton Vetchery, CEO of Modern Fertility, thank you as always for joining us. Coming up, it is all about the gaming industry. We hear from a key CEO. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Taylor Riggs in New York, in for Emily Chang. Super League Gaming having a moment this year as the company continues to surpass multiple benchmarks even during the COVID-19 crisis. Will the momentum continue post-pandemic? Joining us to discuss the state of the global gaming industry, Ann Hand, CEO of Super League Gaming. And I am curious, as we start to open up again, as we start to think about reopening, how you think this momentum can or will continue?
Yeah, it's probably one of the most popular questions I get from our public investors. And I think that, what I look at is the predominant trends that existed prior to COVID. Even before the surge of engagement on digital platforms due to stay at home, you already had gaming bigger than TV, bigger than the global film box office. And I think it really comes back to something we've talked about on the program before. This is the dominant preferred form of entertainment for Gen Z and millennials. It's a lifestyle decision. It's social engagement. It's about community. So there's a lot of stickiness there that I don't think will really change post-COVID. Certainly for us, though, it has been a real accelerant in our digital reach.
How do you turn that accelerant into real monetization?
Absolutely. I mean, we knew when we listed on NASDAQ that the pressure was on. Everybody's excited about this competitive video gaming space, but it's nascent in its monetization beyond the traditional publisher model. And so we feel that heat in a good way. For us, what we've been doing is really aggregating two things that we can monetize. One is gamers, right? So we have about 2.3 million strong registered users, and that's about 5x where we were last year. And then more importantly, we're aggregating their content. It's a user-generated platform where they're giving us their gameplay, their highlight reels, and we can distribute that content and monetize it in a lot of different ways. And so, for example, this year we have year-to-date produced 191 original content series that have been posted on Snapchat and Instagram. We can drive ad revenue off of that, of course. But again, this is derivative content gamers are giving to us that we're able to repackage and monetize. So that's really the key, is monetizing the player and monetizing the content that they're giving us.
I'm curious if anyone has thought about any addiction issues, or when we're all coped up in this pandemic and at home, perhaps maybe using gaming and taking away from other learning experiences, and if that has allowed you to think about how to turn in gaming into also a learning opportunity as well to help combat some of that criticism. What do you say to that?
Yeah, absolutely. I mean, actually, that's really at the heart of Super League. When we came together in 2015, we saw the trend in gaming. We saw that there was a lot of positivity in gaming. I mean, most of these games have a lot of strategy and critical thinking. You're seeing gaming being used more and more in the classroom, the gamification of things to advance kids' learning. We saw that when you wrap teams and leagues and positive tournament structures around it, it taught you about sportsmanship and collaboration. So that's really at the heart of what our brand stands for. That's how we've been able to attract the kinds of partners that we do, whether it be Topgolfs or Tencents and Activision Blizzards, or it happens to be great brands like Logitech or Nickelodeon. It's because we saw that there was an opportunity for positive gaming that's good for you and reinforces good behaviors. And that's a real hallmark of the company, is that we have a pretty high code of sportsmanship. Of course, too much of anything is not a good thing, but you just have to remember with gaming, it's just as much about the friendships that you're building through the game than it is the play itself.
You mentioned partnerships, and one of those, of course, is you're partnering up with City Football Group, soccer club operator, as we know. What do you want to glean from that partnership?
Yeah, I mean, we're super excited about this. I think that there's a reason you see traditional sports team owners now investing in professional esports teams. These days, the gamer and the traditional sports athlete aren't anymore separate audiences, they're converging. And so we love the idea of bringing a traditional sports property and a leading football club owner, obviously Manchester City being such a dominant force, bringing them into our virtual environments. And this is going to be a super positive experience where we're going to have our kids who play Minecraft. It's our branded property owned and operated called minehut.com. They're going to get to participate in a 3-month competitive and build experience. They're going to be doing it in the legendary Etihad Stadium. I mean, it's going to be a real engaging, positive experience for kids. We also have another exciting game we announced that we're launching with in a couple months called Venture Valley. That's a game targeting as well teenagers, and it's really about teens learning how to start their own businesses and make smart decisions on how to optimize those businesses.
I finally want to end here on just sort of your perspective around Tencent. The Trump administration has proposed blocking or scrutinizing perhaps some payments within those apps. How does that impact you? And have you spoken with Tencent about these issues?
Yeah, I mean, we've been partnering with Tencent for some time now. I'm not a fintech expert. And so a lot of the conversation that I'm listening to seems to be more targeted towards some of their fintech properties. But what I will say as a gaming partner is that all of the gaming partners that we work with have pretty strong points of view about adhering to the local laws with regard to data privacy of gamers. That's obviously a big hot button for gamers themselves. And so again, that lines up pretty strongly with our brand values. So we don't think there's a concern there. But your point is a good one, which is it's pretty hard pressed to find these days a mega corporation out there, whether it be a China one or even a US one, that doesn't have a significant bet they're making in gaming, because again, they know it's where this next audience of potential consumers are spending their time.
Well, and as that develops, we'd love to have you back. Thanks for joining us. Super League Gaming CEO Ann Hand. Over to Capitol Hill now. In order to keep American data safe from foreign powers, the U.S. is pushing to create clean 5G networks. One key official behind that effort, Keith Krach, Undersecretary of State for Economic Growth. He spoke earlier with Bloomberg's Kevin Cirilli in Washington.
The tide has totally turned, Kevin. It was 8 countries, 10 cities. You know, the big news is the integration of the Clean Network with the EU Clean Toolbox. And, you know, the countries I went to, Luxembourg now has picked nothing but clean vendors in 5G. This morning, Belgium announced it. The big one was Germany, and that is where they're about ready to issue regulations that, in essence, will exclude Huawei. And then we saw the same thing with regard to Austria, Portugal, Spain, Estonia, Albania. So now the transatlantic alliance in 5G is secure. So it's about 25 of the 30 NATO nations.
Well, let me press you on this. Why the shift, specifically with Germany? It seems that in recent weeks there's been a shift with Germany. What changed?
By the way, I really think it's a combination of 3 factors. The first one is, and I spent a lot of time with NATO, with Deputy Secretary Giovanna, and he said, look, we can't afford to have a fractured NATO. We need the 5G civilian networks in peacetime and wartime. We can't have some that have trusted vendors and some that have untrusted vendors. So that's factor number 1. The second is the 5G EU Clean Toolbox. And I met with my old friend Thierry Breton, who's the EU commissioner. And a lot of people don't know this, but he announced it, that the board of directors for the telcos in the EU have to make the decision. And if they choose a high-risk supplier, which is basically the Chinese suppliers, and something goes wrong, they are personally liable. That's huge. And then the third thing is that integration with the Clean Network, and they can see that momentum all around the world.
Even you look at some of the economic data of some of these Chinese telecommunication firms, whether it's Huawei or whether it's even supply chains like ZTE and whatnot, and they're making a lot of money. Even despite Europe moving elsewhere, their profits are booming. Does that concern you? How does the U.S. diminish some of the clout of these companies?
Well, by the way, I think you're going to see it show up in Huawei's numbers eventually. You know, they're a private company, so who knows with these guys. But, I mean, you can see their deals are evaporating all around the world. Last February, they announced they had like 90 5G contracts. The most we can count outside of China is 7.
And meanwhile, going back to China, you were just in Taiwan. I want to ask you about that in a second, but specifically on Chinese payment, digital payments. You look at Alipay, for example. What is the administration going to be doing, or what, sir, are you and your team doing about many of the national security economic concerns pertaining to these companies?
By the way, I can't talk about our internal deliberations. You know, obviously, it's a cause for concern. So that's about all I can say at this point.
Meanwhile, you were in Taiwan. You were attending a funeral. And tell us what happened. How was that?
Well, I went over for the funeral for President Lee. He's their father of democracy. He's like their George Washington. I was the highest ranking State Department official since 1979. When I went over there, the Chinese sent 37 fighters and bombers to break Taiwan airspace. But I can tell you, I had such a great meeting with President Tsai and also many of the CEOs. We had an economic dialogue on many issues. They are a great partner, a great friend. They're a role model for capitalism and democracy in that part of the world.
Mr. Undersecretary, thank you so much, sir, for your time.
Thank you, Kevin. I appreciate it.
That was Keith Krach, U.S. Undersecretary of State for Economic Growth. And coming up, Hyzon, a hydrogen fuel cell company, just got cash from a major oil conglomerate. What does this partnership mean, and what's the company doing to prevent another Nikola incident? All of that next. This is Bloomberg. Tow Total, one of the world's largest oil companies, making another bet on clean energy. The global oil conglomerate adding to its renewables portfolio with Hyzon Motors, a hydrogen fuel cell maker aimed at developing and manufacturing clean commercial vehicles. The company already has 400 vehicles on the road, expecting to deliver another 5,000 fuel cell powered trucks and buses over the next 3 years. With us to discuss the recent round of funding and the future of the company, it's Hyzon CEO Craig Knight joining us from Sydney. So good morning to you, sir. And given that it's a relatively smaller company, talk to us about some of those financials. A goal of 5,000 trucks and buses in the next 3 years. How do we get there?
Yeah, thanks, Taylor. Thanks for having me. It's a great pleasure to be here, and good afternoon to you. So Hyzon Motors is the realization of a 17-year journey, actually, for our chairman, George Gu, and myself, through the parent company's activities, Horizon Fuel Cell. So while Hyzon Motors is a new entity, it's been set up to accelerate the energy transition through commercial mobility. It comes out of a fairly long pedigree of core PEM fuel cell technology. So it's a global business right from the outset because of the long history in the core technology.
And with that, what are the revenue numbers behind a path to 5,000?
So we're looking at a gradual path to multi-billion-dollar vehicle deployment revenues. Clearly, we have to. While we think big, we always start small, and that's been kind of our guiding motto through our whole history with the core PEM fuel cell technology. So we're expecting to grow this business significantly, which is why we need strong partners such as Total on hydrogen infrastructure, because this will be a global market with big scale and global reach.
Let's talk about those partners. Total is a great first investment, another additional great investment. What about big carriers? Has anyone else approached you as you think about the commercialization of this?
So we're obviously engaged in a number of commercial discussions with major corporations around the world, and we want to be part of their decarbonisation journey. We believe that hydrogen's the only option to get very high utilization commercial vehicles off diesel and onto zero emission platforms. Therefore, we're talking to government agencies and major corporations, all with a growing decarbonisation imperative.
Talk to us about, I'm trying to get into and understand more of the business model here. You've mentioned that you might outsource the building of the trucks. Who would that be? And is that part of then how you would directly sell or lease these trucks?
Yes. So we concentrate on the core hydrogen system and PEM fuel cell powertrains, if you like, and we outsource non-core activities like building chassis and sourcing electric motors and that sort of thing. This gives us a reasonably asset-light business model, and we can depend on really good quality vendors to help us put together those capabilities. So we can actually work with a number of different partners because we have the core fuel cell powertrain technology. This can be leveraged in many applications for mobility, anything from heavy trucks to port equipment to trains and so on. So we can actually work with a lot of different incumbent players in these different segments.
Can you give us some names of who you're in talks with?
Look, a lot of discussions are commercial in confidence, obviously, and it's because it's relatively early days. I think I'd rather wait until we have, when we can showcase the actual vehicles on the road before we talk about names.
I understand. I had to try. Talk to me more in this moment. There's been so much focus on companies like Nikola, for example. How do you differentiate yourself? How do you get your message out there? And I'm thinking really if this all comes down to intellectual property and maintaining that as your goal.
Absolutely. So it's a good question about intellectual property being at the heart of this business, because in our view, the fuel cell is the core technology within a zero emission heavy mobility system, and this is at the core of our business. So in fact, we believe we've got the core technology to differentiate our vehicles. Even where we've outsourced the non-core components, we can differentiate through the core technology. So our focus is squarely been on laying the foundations of the core technology through the parent company's journey over 17 years. And so we've built up a very strong portfolio of IP in the core tech. And as you rightly say, this is at the heart of a successful business model around fuel cell commercial vehicles in the future.
How are you thinking about the future of this business? If it's longer range, how do you get there? Or if it's inner city, how do you get cities to pay up for this kind of technology?
It's a great question about paying up because, so Taylor, in the beginning, to get started, you need some early adopters maybe willing to pay a little bit more to start the journey. But frankly, within the next few years, we expect to see total cost of ownership for hydrogen-powered buses in urban areas, like you mentioned, as well as heavy trucks. Within the next few years, we expect those total cost of ownership numbers will match diesel fleets. And this comes about through ongoing innovation and cost down curves in the core technology and the vehicles, but also increased investment in hydrogen and increased availability of hydrogen. So that's a very important consideration in the total cost of ownership, is the cost of hydrogen as a fuel.
Craig Knight, CEO of Hyzon Motors, come back again
Thanks.
and join us. Still ahead, thousands of dollars have disappeared from several Robinhood users' accounts, and little to no explanation. Yet another problem for the widely popular online brokerage. All those details next. This is Bloomberg. Robinhood catapulted ahead in its online brokerage rivals, attracting millions of young, amateur retail investors. Yet with the company's rise, it has also come with no shortage of problems. Bloomberg was the first to report several Robinhood users struggling to get quick help when their funds started disappearing. For more, I'm going to bring in Bloomberg's Sophie Alexander. Sophie, great story. What did you uncover in your analysis and investigation?
Yeah, so we heard from several Robinhood users that they noticed some of their shares were being sold, or the positions were being sold, and they weren't the ones doing it. And then they saw that their money was being withdrawn by an entity called Revolut. And then, they just couldn't get in touch with Robinhood to try to figure out what was going on. And the response from the company was pretty frustrating for all of them.
And I want to get to the response. But first, what is the recourse? Do we have any sense that if your money starts disappearing, what do you do?
Everyone's first instinct was to try to find a phone number to call for help from the company. Robinhood doesn't list a phone number for customer support. They suggest you just email support@robinhood.com and someone will get in touch with you. But that's really just like a boilerplate email that's responded to you saying, hey, we're on top of this, we're going to get back to you. And then someone else follows up with a name, like a Lauren or a Rachel, or someone says, hi, I'm here to help you. But again, these are just boilerplate emails saying, we are looking into the matter, and it's going to take us a few weeks to figure out what's going on. But for a lot of these people, the transactions were still pending at the time that they got in contact with Robinhood customer support. And still, Robinhood wasn't able to do anything to keep the money from being withdrawn, and they lost the money.
Sophie, I am curious, just thinking big picture about Robinhood. No one saw this pandemic coming. No one saw the rise of this retail investor and the massive surge to this online account. Yet, given that, now that we're 6 months in, do you think that Robinhood has done enough to scale up, to start staffing up, to get the customer service, given that they have had such a big increase in just a short amount of time?
Yeah, the company has more than doubled their customer support team since the beginning of the year. They're opening up 2 offices also this year to, house those new team members. But still, there's no phone number, and a lot of people were frustrated with the customer support they got. A lot of people said that they would reach out and they wouldn't hear back for a while, and then if they tried to follow up with the person they had been talking to, a new person would respond, and so they just kept getting new agents responding to their same inquiries, and not as quickly as they would have liked.
Sophie, I'm curious, just final question here. Are these glitches enough to deter investors to go into other more established accounts? Or is there something about Robinhood that makes people love that company so much that they can get past these glitches because, frankly, they love it?
I'm not sure. I think this will certainly be a test on the company. From the people I spoke with, most of them said that they were planning on taking their money out of Robinhood once they got it back and once they had access to their accounts again, because many of them were locked in response to this. But, you know, it's hard to say. There is such a craze over the company right now.
Our thank you as always, Sophie Alexander, for covering these stories as they pop up every now and again. And that does it for this edition of Bloomberg Technology. I'm Taylor Riggs in New York. It was great to be here. And stay with us because we have a special programming note. The conversation surrounding the economy and equality will continue here on Bloomberg. Join Bloomberg Television in partnership with Intelligence Squared for That's Debatable. Is it time to redistribute the wealth? Well, it starts tonight at 7 p.m. in New York, so you can stick around and, well, see the answer to that question. Happy Friday from New York. This is Bloomberg.